We'll go across now to our segment, Quarter Se Quarter Tak. We are getting you expectations from one sector every week. And today we have expectations from the NBFC space. Abhishek is standing by, and then we'll get into a discussion. Abhishek, lay it out for us.
Well, Prashant, to begin with, NBFCs could see seasonal tailwinds amid selective stress in Q4 FY25, and they are likely to see peaking of cost of funds for them. So, seasonal positives to support is the growth. Q4 is seasonally a strong quarter for NBFCs with improved disbursals, recoveries, and collections as well. So, tailwinds to asset quality is expected, aided by government project payouts, better winter crop yields, as well as the fact that business team incentives are there in place. So net interest margin is likely to remain comfortable as 15 to 20% of borrowings are repo linked, and they may offer a cushion despite a rise in cost of funds which are nearing the peak right now. Now stress pockets show signs of stabilization as well. Early signs of breather in stress segments such as unsecured loans and microfinance is seen right now. So management commentary will be the key gauging factor to see if the stress has peaked or not, especially in the unsecured and MFI portfolio, that is microfinance portfolio. Selective weakness will persist, like muted disbursals is expected in prime housing loans, vehicle finance loans, and unsecured or personal loans, tightened due to recent regulatory scrutiny that we are seeing. Now, housing loan disbursals is expected to be impacted by registration-related issues in the cities of Bengaluru as well as Hyderabad. Collections and recoveries will set to improve in this quarter, given the fact that seasonal pickup is always seen in Q4 with respect to collections, driven largely by the Rabi or winter crop, realization, government project payments, and target-driven efforts by sales or collection teams. So, credit costs will remain high for the players in the microfinance sector in Q4 of FY25. On your watch list, large H1 FY25 slippages likely to stay sticky for the lenders, with full recovery potentially slipping into H1 FY26. Now, close monitoring of commentary on stress levels in unsecured and microfinance portfolio will be critical to watch out for. Some key estimates that we have from Kotak Securities includes Bajaj Finance reporting a YOY growth in NII by 22% and PAT up 18%. Bajaj Housing Finance NII up 34% YOY and PAT up 61% YOY. Chola Mangalam, they expect NII to grow by 30% YOY and PAT to be up 20% on a YOY basis, while for Muthoot Finance, Kotak Securities estimates NII growth of 35% YOY and PAT growth of 43% YOY. Spanna Spurti, Motilal Oswal estimates NII to decline by 13.4% YOY, while they can report a loss of nearly 414 crore versus a profit of 129 crore in the same quarter last year. Back to you.
Thank you very much for that. Digant Haria is now joining in. He's the founder at GreenEdge Wealth Services. By the way, look at the Nifty Bank go. The Nifty Bank is consolidating its hold above 55,000. It's 55,200. It's a new record high for the Nifty Bank, even for ICICI Bank, HDFC Bank. And Hormus points out that in the last 25 trading sessions, from the March 11th low of 47,700, the Nifty Bank has scaled close to about 7,000 points. Digant, it's only getting stronger, especially for names like ICICI Bank and HDFC Bank. Before we get chatting about NBFCs and the expectations, first come in on the numbers that we've seen from these two large private sector financials.
Yeah, morning, Reema. See, ICICI continued its streak of very strong numbers. But if you just see, their loan growth has been a little bit tepid. Everything else is spick and span. And if you look at HDFC, you can actually see something reverse, that, the loan growth has probably not picked up, but margins have started to improve. So I think it is just telling us one thing, that probably ICICI Bank is at the best of its performance and HDFC Bank is at the worst of its performance. So, if I look at next 12 months, I think a switch trade from ICICI to HDFC will do a lot of good to investors. At least that is what we see it.
All right, let's talk about the NBFCs now. At a time when, there are private sector banks which are looking up, the rate cycle is on the lower end and consumer sentiment seems to be improving. Where would you, place your bets in the NBFC space? Do you think they're likely to outperform growth when it comes to their bank counterparts, or do you think NBFCs still have a couple of quarters before they outperform banks?
Morning, Mangalam. See, I think NBFCs also, you can see a very similar pattern. Let's see, all the top quality NBFCs have already made lifetime highs. And, they're pricing in a lot of good things which will come in the next 12 months. So something like a Shriram, Chola, Sundaram, Bajaj Finance. I think a lot of up moves have already been made. It's not very easy to see big up moves because the earnings are not going to surprise in a materially big way because, in the previous show also I said the PSU banks are alive and active and the competition will be very high. What we are seeing is, some bit of easing of the last 12 months. So I would think that in the NBFC space, you should play the other segments, not the very high quality segment, because there a lot of the upsides have been captured. And, I was just watching QSQT, what Abhishek was saying. So this quarter, we should do something different in the sense the segments which will give very good results are probably the segments which are going to peak out. They will not give great returns or great upside in earnings. So vehicle finance is one where we think we have peaked out in terms of the cycle. And gold finance also, because of the regulatory guideline, both these sectors will report very good numbers. But that very good numbers should not be treated as, what will come in the next 12 months. Next 12 months can be a little softer. Whereas, in sectors like, say, microfinance or personal loans and personal finance, I think the stress will bottom out either in this quarter or the next quarter. So we will actually be very watchful in places where results are bad, because if the commentaries are good, we know that we are probably at the end of the stress cycle.
Any particular picks in the microfinance which are close to bottoming out or may bottom out in Q4?
So I think there is a huge buffet available. Banks like AU Small Finance Bank or Equitas and an Ujjivan in the bank, small finance bank space. Then in the NBFCs, you have something like an Arman and Credit Access. So it's a huge basket which is available. Even maybe L&D Finance is microfinance heavy. So 5-6 names, I think, that should do well over 12-18 months. That's our take.
All right. Digant, thank you so much for joining us and giving us your view on the way the sector is likely to be.